Hey, good evening, everyone. Leon here. Just wanted to take a couple of minutes to talk about all the refinancing going on of first mortgages. Want to speak directly to financial institutions, small banks, credit unions that have customers, members that are looking to refinance their first mortgages. Makes a lot of sense. Rates are low. I've seen some really good advice, going from 30-year down to 15 down to a 10-year loan, get that debt retired. I've seen some crazy advice. I've seen some people telling folks to take their loan out to a 30-year and dramatically drop that payment and then take advantage of the excess cash. And, that's a great idea, provided that we're looking at the second pillar of financial wellness, which is savings, right? So if the strategy is that there's no savings, if there's no nest egg, if there's not 9 months worth of reserves, then maybe that's not a bad idea. If there's no other way to improve that household cash flow, but to stretch out that mortgage a little bit, but then within a disciplined framework, do something with those monies, build a nest egg, build 9 months to 24 months worth of reserves, then it would make sense. So I just wanted to pause for a moment. I just want to ask you, what is your strategy within your organization, within the first mortgage refinances, to complete the 4 pillars of financial wellness, right? So we have household cash flow, which obviously the refinance could improve that. But then there's savings, protection, and knowledge. And so I just love, if you wouldn't mind, put a little blurb, put a little comment. What is your organization doing within financial wellness when it comes to first mortgage refinances? Are we going there and looking at the other debt? Are we going in there looking at the car loan, the credit card, and the other things that maybe could further help increase that household cash flow and get them to a point where there is some savings going on? And of course, if there's not, then we need to look at protection and how do we protect that debt. There is a lot of people right now who are losing their homes and their cars simply because the frontline team did not sell debt cancellation, right? There was a moment in time where you could have worked out the term of that loan to include coverage that if you lost your job, those payments would be made. And there's a lot of people losing their cars, losing their credit ratings simply because there wasn't coverage in order to provide that protection. So, hey, so if you wouldn't mind, I'd love a little comment, a direct message. I want to know, what is your organization's plan for people who are refinancing their first mortgages to include household savings? What are we doing to include that second pillar? Have a great evening. Talk to you soon.